Now starting, all attendees are in listen-only mode.
Hey everybody, we just got the closing bell. This is Gil here for our usual Tuesday afternoon webinar, our live webinar with Dr. K, who I think is coming on. Dr. K, you there yet? No, we're still waiting for him, so I'll just go ahead and give you guys the scoop today. And as you know, the market direction model went to a buy signal on the basis of a fourth day follow-through. So we actually look at this day right here as the first day of a rally because you close in the upper half of the range. Little pullback here on some pretty heavy volume. Now notice that looks pretty ugly, but it's kind of consistent with how ugly things got here before you turned around. And remember that what kept happening here is you had these ugly days even 2 days later off this low, and you're closing in the lower part of the range or at the bottom of the range, and that's why they're red on my screen here, the way I set up my charts, even though you have blue volume showing that they were up days, but they actually, from open to close, you were down, and so these are red there. So it's actually showing it looks like it's stalling. But yet you gap up again here and you continue higher, and there's not a lot of volume in here. You have some pickups in volume. Today you had a pickup in volume. So, you know, we were talking, or actually writing to you guys and staying in communication via the short sale setup alerts, the SSS emails that you guys get. And we're talking about a couple of situations there. It's really kind of late short ideas, but our ideas are the short coming in late on the downtrend off the peak here. But as we were saying, you're in a position logically to stage a rally. And if we go all the way back, first just notice here you have the NASDAQ came down below the 200-day, undercut this low on, it was last Friday, or no, actually last Thursday, and then you started to rally from there. So that's actually a logical undercut, and that coincided with the S&P bouncing right off the 200-day moving average. See, so it actually knew exactly where to bounce from. I think it was only like 18 cents difference between where the S&P stopped going down and where the 200-day moving average was. So that's kind of interesting, uncanny. But in any case, that coincided with the NASDAQ breaking the 200-day moving average and undercutting that low, which we had thought looked logical even before it happened. And that's kind of one scenario that Dr. K and I had outlined, and that kind of came through. And so you can even see that if we go back to the last time QE1 ended, the first time we hit the 200-day, we bounced off it. Then the second time we kind of spent a little time below it, and then he started to come back out and got choppy in here. And this whole period in here, if you were playing brief moves in the market, you could have made some money going back and forth, short-term bounce trading, I guess you might call it, until we really started a nice trend in the market to the upside in September. So it's a little bit similar to what you're seeing here last year, but you know, this logical support, how far this carries, we don't know. It could start a whole new rally because today is actually technically a follow-through day, and the model went to a buy signal. Now, you know, follow-through days and buy signals are one thing as far as it refers, or in terms of its implications for the indexes, but you know, how do you play it? So that's the other side of the coin here. We'll get to that part. But you know, the other thing you have going on here is, actually, let me move this chart out of here and use this chart over here, my daily chart. And use it. Take a look at the UUP, and so you can see the dollar today gapped below the 50-day moving average. That's the blue line. The black line is, of course, my 65-day exponential moving average. If the two together kind of make this zone of resistance support, the way they kind of work together, and you can see that that's what happens with both of these for the dollar here as it goes below and back above and then back down. And so now you're coming down again on the dollar, maybe because the market's thinking that the problems in Greece are going to get worked out. But to me, and if they do get worked out, what does it mean? It means more money printing. And so I think you start to see movements again in silver and gold. We're seeing gold flashing pocket pivots, so we pointed these out to everybody. Here comes my briefing alert. Oh, there's some interesting news from BMW. It says they will unveil the next major step forward in cloud infrastructure on July 12th, so that should be interesting.
Yeah, they're selling off.
And they're selling off after hours?
No, actually, it's the very end, it looks like someone stepped in and just knocked them down a little bit.
Okay. So you're there, Dr. K. You're in. Anyways, you see two pocket pivots in gold, and it's continued higher off the 50-day moving average. And you look at it, there's only really been, this is actually the highest close for the GLD since it peaked out back at the end of April. So gold is acting pretty well, and all we see is money printing. Today, Timothy Geithner, the U.S. Treasury Secretary, said that there would probably be a budget ceiling or deficit ceiling deal worked out. I know it's all a twisted concept. Since when do borrowers determine their debt limits or credit limits? I want everyone to call your credit card company and tell them that you have decided to raise your debt limit or credit limit another 100 grand, then go for it. Spend all you want. But apparently the U.S. government can decide how much they want to borrow, and I guess they're borrowing it from themselves. So lately we started to see the TLT bonds are just holding up, and so there's no real breakdown here, even though the dollar started to come off. So part of this maybe is due to a fear bid coming in from money just looking for a safe place to hide during the Greek crisis, and we'll see how bad that gets. There's a no confidence vote. When is that, Dr. K? You're in Europe, so when's that vote coming with Greece? Tomorrow morning?
It should be,
your time?
it should be 5 p.m. Eastern time. 5 p.m.
Oh,
Eastern.
really?
Yeah.
So they're staying up late over there.
They are. Surprising to the Greeks.
Okay. They like to party, I guess. But yeah, that's kind of what you got going on. But let's get back. I want Dr. K to go into some more detail about the market direction model. My take is, okay, you have a follow-through day, and we bought a little TNA, the Russell 2000. I think is that a 2x or a 3x ETF?
It's a 3x.
3x ETF. So that's a pretty juicy one. But you take 10% position, your 3% exposure to the Russell 2000 on this follow-through. If it fails, I'll let Dr. K talk about that. But you're out pretty quick. So Dr. K, what's the deal with the market direction model? Is it all based on a follow-through today, or is there something deeper at work here?
Right. Well, we have the follow-through, first of all, but we also have the indication that Greece will temporarily solve its issue and not fall off the edge here. So the markets are rallying, I think, primarily on that news today. So we caught that early in the day. Plus, we saw proper price volume action, the kind I'd like to see in leadership and in major indices. We also had Geithner mention that there's probably going to be more money printing in some form or another. And frankly, the U.S. has, well, let's just say they have more than two choices, but the Fed sees it as two choices, and that is default or devalue. And we know the U.S. is not going to default, so that pretty much leaves Bernanke's hands tied into having to devalue the dollar further by continued quantitative easing in some form or another. And I think it's going to be, well, while they'd like to ease off of QE, we see where the markets are at right now, and Bernanke's speaking tomorrow, and he's going to obviously say things that are soothing to the markets because he doesn't want this downtrend to get any worse than it already has. So I think the odds are in favor of a relief rally of some sort right here. So the market model went to a buy signal intraday on the basis of all of that stacked in its favor. Now that said, if I see some indication of very weak rallying here, the model may not hesitate to reverse this buy signal back into a sell signal.
Okay. I just want to make sure. Can everyone see my screen? Okay. Okay, very good. We just weren't getting any questions in there, which is kind of odd. Usually there's always about 10 or 20 questions queuing up in there. All right, thank you, everybody. Good to know. Okay, so that's where. So but you say something about leadership. The leadership qualities or characteristics were there. What leadership? Are you talking about bounces off of logical support areas?
Yeah.
I didn't see a lot of things breaking out in terms of fresh new breakouts. That doesn't mean that can't start happening over the next few days, but I didn't see any of that. So that is what you're talking about, like
yeah,
for example.
Too soon for actual breakouts. I mean, there were a couple stocks that actually did break out today, but those are far and few between. What I wanted to see was leading stocks that were at logical support levels, such as the 200-day or the 50-day. And
Like
we saw a
Baidu?
number of names today. Baidu would be one of them. We had Fortinet that bounced off its 50-day quite nicely. We also
Yeah,
had
that's a pocket
Netflix.
pivot.
Netflix off its 50-day. It didn't have a pocket pivot. It looked today early on that it might, but the volume's not quite there. But still, it's nice to see a former leader gain traction at a logical support. TIF, Tiffany, that had a gap up a few weeks ago and then issued a pocket pivot early on today. The fundamentals there are quite strong. And Riverbed was at the undercut the 200-day and then managed almost a pocket pivot, closing just above, a hair above the 200-day moving average. So enough of these names were acting the way they should, in addition to the market averages looking like they were going to follow through.
Yeah, so, I mean, the way I see it, these, you're not going to buy that. You're not going to buy Netflix. Are you going to buy Baidu? No.
Yeah,
Here's what I'm looking at. A lot of times when the markets come off the lows in this QE market that we've had ever since March of 2009, I've noticed one of the common patterns that show up that are viable, and you can even see it possibly setting up here in Baidu, is a shakeout plus N, where N is 8 to 10% in points of a move in a stock. So, for example, for Baidu, you might have a shakeout plus 10 from this level here. So this low here is 124.66. So if, for example, you saw the stock come up to 134, I'm sorry, higher than that, you'd have to go from here 127. So 140, which would take you through the 50-day, and that might even coincide with a pocket pivot or something. But that would be a shakeout plus N, where you're using 8 to 10%. So for Baidu, I'd use 10 points. If you're looking at something else that's lower price, like an MCP, if it's coming up through here, you might probably use 4 points. So from here, your low is 55.82, so 59.82 might get you up to here on a shakeout plus 4, say on a Molly Corp. And that may be, because of the positions I'm seeing a lot of these stocks in, it seems to me that that may be your buy pattern. And a lot of these will probably, if in fact this is what happens, and of course we're just going to lay out scenarios, because remember, the market is not about absolutes. If you try to instill some certainty or some sort of absolute black and white view to everything that remains constant throughout any certain period of time, then you're just asking for trouble. So you just go with what you're seeing. And so what we look at here is potential for these stocks to set up this way. So it's really, the market's all about potentialities or potential possibilities. And so we're looking at what's possible here. If this follow-through works, okay, what are we going to try and buy? So I think some of your better situations would be Fortinet, simply because when you look at this on a weekly chart, stock's held up, it's in a base, tried to break out here. I don't know if you count that as a week, but at least you're 3 weeks into a little pattern here. But the fact is you have follow through here, or the pocket pivot here on the follow through day, and this may take the stock higher. I like this stock for a long time. It's never really done anything. Despite my loving it, it's never loved me back, so to speak. And it may never, who knows. I don't know if it's necessarily just going to fly out of here, but it'll depend on what the market's doing. But that's a good move. You could possibly take a position in something like that. Also, what's acted well during this correction? I like Illumina. Still remains a pretty strong story in gene sequencing systems. They've got a new one coming out in the third quarter. This is the daily chart. It's something of a cup with handle, but tried to break out here, and that's about when the market started getting into some trouble off the peak, and it's trying to pull back. But notice how it's never really broken down below its 50-day. You do have a slight violation here on an intraday basis 4 days ago, but it did close above the low of that first close below. But notice it did hold the 65-day exponential. So, right now using the two lines, to me, that's kind of like a support zone for Illumina, and it's held that pretty reasonably well while the market's corrected. So really, you can look at this as a cup with handle, high handle, but to me it's just here's your cup with handle here. This is your cup, and then you have a 2-week handle that comes out with a bit of stalling action. So now you're moving higher. Now you're actually, to me, in a secondary base coming off a cup with handle where you're 1, 2, 3, 4, 5 weeks, 6 weeks into it now. Well, 5 weeks and 2 days. and you actually have some tight closes in here. So that's one that's on my watch list. And it looks okay. I don't know yet if it's ready to buy. Today you really didn't really see any big volume coming in to the stock really at all. Dr. K, any other things that you think present reasonable opportunities right now that you would look into immediately?
In conjunction with that ILMN, we have Zoll Medical. It's in the medical.
Oh, you're a Zoll man. Okay. I like it.
I was hoping to see a better close. It didn't really. It closed about flat, but it was a pocket pivot volume. And it's at support. It is at 50-day support, but I didn't think it was quite strong enough to mention. But I'm tracking the price here on.
Well, it's a thin stock, 219,000 shares a day. It's kind of a thin stock.
That's the other issue. I mean, it had the gap up earlier at the end of April, so that weighed in in its favor. But yeah, it is thin, and it didn't have the pocket pivot volume signature I was looking for today.
Okay, another one I'm looking at is this Solar Winds. It held the 10-day pretty nicely. It broke out here, pulled back into the pivot point, so second chance to buy it, but it's difficult to buy it on a day. If the market was looking ugly 3 days ago, it's very hard to be buying it back then. But it has popped up off of the 10-day moving average. Maybe it's going to go sideways. I prefer to buy closer to the 25 if I could, but it is within range. If you figure your buy point is this peak over here, say at 24.95, then you would say it's definitely within 5% of the buy point based on today's close at 25.74. So I want to get back to gold. We left gold still, right, Dr. K?
Watching it like a hawk.
And we own it, so we started buying back here on the pocket pivot, and it's hanging in there pretty well. But again, the gold play is basically predicated on two factors, and we think that there's some insurance on both sides of the news here. So let's just consider if, as Geithner said today, they're going to continue, I guess, issuing debt because they need to raise the debt ceiling. So I'm imagining that means they need to raise more debt and increase the debt and borrow more money to run these huge deficits that don't seem to be able to go away. You have to consider that. I saw some numbers, and anybody feel free to pipe up about this, that even if you look at the deficits under the Ryan plan, which many people consider to be, or at least Democrats basically think it's radical, but it still shows that the national debt gets over 20 trillion by 2012, or I'm sorry, not 2022 or something like that. So this big ship, this huge cruise ship of debt that's just kind of mowing through the water, it just keeps on going. And on that basis, you have to consider that currencies, fiat currencies, and I might add, most of you probably already know, there's never been a fiat currency in history that has survived. And the dollar, the euro, they're all just fiat currencies. So will they survive? Well, we'll find out. But you've always heard you've heard the phrase many times before. I always remember during 1999 when the internet stocks were going nuts, and you heard it on advertisements for the investment industry that this time it's different. So maybe this time it'll be different for fiat currencies, but somehow we don't think so. But that's really the play there, is alternative currency play. Now, if there's a crisis in Greece, then that places some of the European banks in question, and so the whole thing begins to revolve around a financial crisis or the financial system running into problems. And again, where is money likely to run to? Perhaps into precious metals. Right now, what it's telling you is that no matter what the market's really been doing lately, gold has found a bottom along the 50-day and then began to rally before the market did. So it's acting much better. Meanwhile, gold's little buddy, silver, he's just tracking sideways. Today we picked up, I think it was a slight increase in volume. It doesn't really show here, but if you're looking at the silver futures, for example, they're just coming up. Looks pretty much like the SLV, but I track these. You're just coming up. Notice you've been in the upper part of the range for the last 4 days. You're heading for the 65-day. I would be watching for some kind of a pocket pivot move to confirm a new uptrend in silver. For now, it just seems to be tracking sideways, and everybody and his brother sees a head and shoulders formation. And the one thing I want to point out about the head and shoulders formations is that The weakest ones tend to have the descending neckline. So if you go back to Finisar, and everybody remembers Finisar, here's a head, shoulder, and your neckline was actually a descending neckline here. And that's what you want to see. So when you start seeing something like this, the probability of this being a head and shoulders is not as great because you really kind of have a straight across neckline. I'd give you an example of a short sale setup that we got stopped out of very quickly. This is a flat neckline, so it tends to be a little bit stronger. And I also thought, throwing out a couple ideas like this, I'll come in and I'll short a couple thousand shares of UA, or I'll try a couple thousand shares of Lulu, and right away they just punch you out of it. You're just stopped out right away, unless you're going to sit there like a moron and try to ride against it. If you're stopped out, you're stopped out. So I'll come in and test these on the small positions, and if you're bopped out, it tells you something too about the market. So you get a sense that you're really kind of playing out the downside, at least in the short term, for the short side of this market. So really, the stocks that we've talked about recently, Finisar was beautiful, busted apart, blew apart on earnings 4 days ago, gapped down. Las Vegas Sands has continued to come down. Now you're getting a rally back into the 40 area. If you see the follow-through day today, and if you shorted this up around the 200-day and you have a profit, you could just book it and back away and see what happens from here, because with a follow-through day, you're really now looking for a failure and for the model to go back to a sell signal or a neutral signal at the very least, in my view, before you want to start trying to short again. So that one worked pretty well. The UA and the Lulu we just got stopped out of, but those were kind of riskier plays simply because they were higher up in their patterns, and potentially had the market continued lower, then you would have expected further breakdowns in leaders that were holding up. So on this violation of the 50-day moving average, the basis of this trade then was, now that it's violated the 50-day moving average, it should find resistance at the moving average. And as soon as it didn't, pretty much you can be gone and out of that trade. The premise also in UA was that it would stay around or below the 50-day moving average as it formed out the right shoulders of a possible head and shoulders formation. These are your two left shoulders, your right shoulder here, 1, 2. This would have been the third one. Didn't pan out. You get stopped out. So that's telling you something when that happens, and you come in and take a few positions, small positions, and you get stopped out right away. It's telling you that the market probably wants to turn. And as we've been saying, the market was in a very good position, a very logical position in which it should rally. And you can kind of see it coming, okay? And we were talking about this, I think, last Friday when we sent out something watching, actually it was on Thursday, watching for this undercut, which did occur. And so that's where you're at right now. You got a follow-through day. What are you going to buy? A couple of things to buy that we see that we're just talking about right now. A couple other names I thought were interesting today. Interactive Corp. They are a big internet company, and they own a lot of different properties. I'm trying to remember who they bought up, but they bought up a lot of different smaller internet companies, and so they look like they're trying to come on. And you've got a base here. Actually, once again, I got the wrong. I'm going to look at this guy here. So you see this is coming out of a base, and here's the little pattern here. It's about 1, 2, 3, 4, 5, 6, 7 weeks here and a couple of days here. It's trying to break out now. So that one kind of looked interesting to me. But I think for the most part, what we're going to be doing over the next few days is we're just going to be watching and looking for potentially shakeout plus X, where X equals 8 to 10% in points of the stock's move. So this potentially could be a big, ugly double bottom. But the way this looks to me, it looks like it needs a lot more time on Cena. Baidu probably a little bit better potentially. Now Apple, which we mentioned as a short as it was coming down here, busts through the 50-day and the 200-day here. Now you're rallying back up into it. We'll see. I wouldn't be buying this. It's just right up into the 200-day moving average, and that could possibly be resistance. So you want to keep an eye on something like Apple, because if it does stall out here and the market fails, then this may become a short sale target pretty quickly. And NTAP also, 50 days resistance for now. You can either use 65-day or the 50-day. They're kind of crossing right now. But you didn't get real heavy volume today. NTAP got an overweight rating and then a neutral rating later on in the day. but it's just rallied right back up into potential resistance here, so it hasn't gone anywhere. And this stock is weaker, so if the market were to fail, this is one you possibly could come after. I think some of the other ones like Finisar played out on the downside. LVS might become shortable again at the 40 level, which would be resistance here. And UA and Lulu were stopped out on. Are there any other names that I've forgotten about on the short side? Guess not. Okay. Not that I can think of. So, but getting back to what's looking good. What's that, Dr. K?
No, I was just looking through my list here, and I think you're covering all the main ones so far. I'll throw
We
some
picked
in.
up the pocket pivot in Cefe the other day. There's a couple of them, and it started the market. So that's been out. Biogen was interesting because you had a gap up here. We had a pocket pivot here that we alerted you all to, and you had a nice little pullback with volume drawing up into the 50-day moving average, and then of course it gaps out. Couple days here. This is kind of getting obvious, but I also think it's pretty scary to everybody, so it wouldn't surprise me to see this thing go higher. Theoretically, was that enough volume there, Dr. K, for a viable gap up on Biogen?
Let me just see here.
Yesterday? No, it actually wasn't.
No, we're not enough volume.
So
but
this is not a viable gap up.
That 150% rule generally it applies to stocks that are not quite this liquid. For very liquid stocks, it doesn't have to be 150% to be a viable gap up. Basically what you're looking for is just a noticeable spike in volume on the gap up day, which the last couple days it really hasn't had that spike you'd want to see. Today you could argue that the volume was sufficient at 112%.
Right, but it closed at the low end of the range.
Yeah, it closed at the low end of the range. It's a big cap stock, so you can also forgive it for that because a lot of the bigger caps doesn't seem to matter where they close in their trading range as long as it's constructive. Really, the buy point on this was when the market was still in a very sketchy situation, which was on the 14th of June.
Right. So, and the medical group has been probably one of the strongest areas. Baxter, I noticed, was kind of a pocket pivot yesterday. It's a big, slow name. Doesn't really get me excited. Hey, Dr. K, I got a question from somebody. If you can switch back to sell on a weak rally, is the market model just being subjective?
No, it's rules-based system that examines the leading stocks and what they're doing as well as the major indices. So, in other words, if we see a weak rally that's characterized by leadership that doesn't seem to be putting its foot forward, especially after having sold off so much. And also, same goes for the major indices, with the Nasdaq being pretty much the epicenter there. The model that would tilt the model into a sell signal if enough of these leading stocks behave in that manner. In other words, we want to see enough thrust here. The market sold off. The Nasdaq was off almost 10%. So we should see some sort of a valid bounce here with volume accompanying the bounce. And if we don't get that volume, that's not a good sign. And also, because the QE effect has materially changed, until we have some sort of indication from Bernanke that yes, we are going to be starting up a QE3. It's going to be robust like QE2, QE1. The model essentially is taking that into account and saying, well, the likelihood that the market's just going to drift higher like it has in the past, that was QE fueled. It's much less likely now until we get that indication from Bernanke.
Okay.
So any kind of weak rally here is context for a potential sell signal.
Yeah, I should point out, somebody's asking why we wouldn't buy Baidu and Netflix here. My question would be, why would you? You're dealing with a lot of overhead supply here. All you did was bounce off the 200 days. So if you're just going to buy something on the basis of the fact that you think it's bounced off of an area, then you would have bought it here on the basis that it's going to get support on top of here, but you would be losing money. We have to wait. Excuse me. We have to wait for a buy signal the way we look at buy signals. So that's what we wait for. And that's why we wouldn't buy them. Netflix didn't show a pocket pivot today because volume was not higher than any down volume over the prior 10 days, and neither did Baidu. So you're not seeing this kind of volume. that's even higher than the selling volume in these patterns. And while they are bouncing down to support, the bounces really are kind of weak within the context of the selling. How far they carry is anybody's guess, but we would actually wait for a bona fide buy point, which most likely would be a pocket pivot buy point or a shakeout plus some number of points. In this case, you'd probably be using a shakeout plus 20 on a stock like Netflix, but this wouldn't be a shakeout. I shouldn't try to confuse you guys there. But you know, those are the types of buy points we're looking for. We're not looking for just a weak bounce off of a potential support area. I mean, it could work, but we would rather buy on the basis of a more concrete buy signal. Somebody asked if you can wait for Baidu, or Biogen rather, to cross above 100. No, not really. You could buy it on the basis of the viable gap up today or yesterday rather, and use that low as your stop, maybe giving it a couple of points on the downside, just to allow for some porosity, because it is a bigger, slower name. Well, it used to be a bigger, slower name until more recently, like in April when it had this massive gap up. But we actually alerted all of you to this viable gap up here. Not sure if anybody bought it. We certainly did, but that would have been a very profitable move. And we also alerted you to this pocket pivot buy point right here, which had you bought it, and who's to say anybody would have bought anything the way the market was acting the last few days, so you would be making money on this. So at least as points of interest, they do show how there are signs in stocks when you see pocket pivots, when you see viable gap ups, oftentimes they're telling you better things to come. So you don't really need to wait for 100. Now, I understand what you're talking about when you're looking for it to get back to 100, but I think long term, you know, Biogen's been through 100 probably in its lifetime. I don't know. Let's see. Yeah. So just going back in time here. Yeah, it hasn't been through 100 in a long time. So you're talking about the Livermore rule, where Livermore would say if a stock goes through a century mark of 100, 200, 300, one of those big round 100 numbers, for the first time, then that will often lead to a rapid move through that level and up a good 10, 15, 20% from there. So in this case, you know, if you're really going to try to and play this as a momentum type of thing, I guess you could try and use Livermore's rule using the normal stops. I mean, if you figure that the low of the gap up day is 98.24, even if you're buying it as it starts to go above 100, you're only going to be 3, 4, 5% away from where you entered. So it's not like you're looking at a big downside loss if you get stopped out. So it's possible, but you don't have to wait for it to cross 100. Mercado Libre has been another exciting stock, but again, you know, are you getting 1, 2, 3, 4, 5? This is more pocket pivot like volume signature, but you've got these big breaks with heavy volume. Dr. K, how do you look at this one? MELI.
Yeah, I mean that big down day you see on the 6th of June is, you know, on a lot of volume. That's almost as bad as a gap down, and so there's a lot of downward momentum, downward force in this. You know, yeah, you've got a pocket pivot volume today, and it's bouncing off the 200-day. But the formation is not quite ideal. So
no, it's a little straight down.
Yeah, I wouldn't. I mean, I saw this one and I didn't really think much of it. So, you know.
Yeah. So, and it's really a weak stock. So, you know, Lulu, is that breaking out of a double bottom? That's not really a double bottom. Usually, when you're looking at a double bottom for the first bottom in the W, so this is the W pattern here, you know. Like that. This is your first low in the W, so the left side of the W. It's only 2 weeks down, so usually you want to see 4 or 5 weeks on the left side coming down to form that first low of the W. So what you might consider this, though, is a shakeout plus, let's see, if you're coming up through this low here is 90.17, so shakeout plus, let's say 8%, yeah, $7. So 97 would have been potentially a shakeout plus 7 type of buy point. Could have looked at it that way. So now it's breaking out. Is it going to go higher? It looks like it may. It very well seems to want to, and it so far has. I mean, it blew you out of the short side here if you're trying to short this rally, and it blew you out very quickly. Sometimes you can actually get a sense of that just coming on the long side if you want to, but There's no real pocket pivot. Dr. K, I mean, this is a pocket pivot volume signature today, and it's breaking out. But Dr. K, you wouldn't call that a bona fide pocket pivot buy point, would you?
Well, I would just, it's breaking out. It's a breakout that happens to be a pocket pivot.
Does that give it more emphasis?
You know, it does to an extent, except this is not the ideal kind of base breakout. That it's just straight up from the bottom kind of breakout.
Yeah,
so that makes me a little uncomfortable buying it up here. I'd probably wait for some sort of handle to form in this stock. It's
right.
Again, it's just one of these. It's not an ideal situation, and in this kind of market environment, you want to be playing the most ideal names. If we were in a more forgiving environment, like we were in certain market uptrends, then I would be more forgiving and probably would have put this on the list.
Okay, here's a good one. ONTY. What do we think of that one? Oh, it's probably going to $200 easy. You should buy as much as you can because it's cheap. It's $8. You can buy a lot of shares.
I love this this reversal action today.
Short it? No, this is a cheap stock. It gets this run. This looks. If you bought it down here and you got lucky on some penny stock play like this, this may be the end of it. But there's no buy point here. We certainly wouldn't touch this with a 10-foot pole. So, but if you bought it here, that was a great play, and maybe you sell it in here. It kind of looks like one of those hot stock, rocket stock short sale setups, Dr. K.
Yeah, I would have to, for that to qualify, I'd have to go up at least typically 4x. So from, say, $4, it would have to go beyond 16 and matter of just a few weeks, and then it would be potentially shortable.
But it may not get there. These guys are losing money hand over fist. 24-cent loss last quarter. They're not making any sales at all, so there's really nothing going on. You have 29 mutual funds owning the stock, and they own a lot of it, which tells me they probably got it on the, I don't know, maybe they were buying it off the lows. It looks like they were, and they're really not getting anywhere with it. Well, they are now. But it's not, this is just a junky, cheap stock. If you got lucky on the move, then more power to you.
Yeah, it's a speculative play. It's the biotech, so it could, this thing could gap up to $16 tomorrow, on some kind of news. But if you play this kind of game, you're going to be wrong a lot more often than you're right. And the one time that you're right is not going to make up for all your small losses, unfortunately. Right. In proper investing, the little losses usually almost never add up to, never exceed the few big gains that you're going to have. But in this kind of territory, with penny stock territory or substandard speculative plays, the odds are not with you.
We already talked about CEFTA. You had a pocket pivot a few days. We alerted everybody to that. So it's Bible then. Now it's trying to break out. If you consider this a base then, and your peak, say, in the base, you pick a high here at 32.50. You close at 33.60. Your $1.10 past the breakout point. The breakout is still within viable range. So not much else to think about there. Checkpoint's a real interesting name, mainly because there's a lot of great news about it, I hear, and it's going to be a great stock, but it doesn't really seem to go anywhere. And you try to have a pocket pivot, but you stalled out at the 50-day, so not really on our radar screen right now. Jazz. It's trying to build a base, is what it looks like to me. This is coming above the 10-day moving average here on this heavy volume. This is one of these new 65-day exponential pocket pivots, where it did get above the 65-day exponential, but here you're trying to come above the 50-day, and you do have a pocket pivot volume signature today, so it's coming above. Dr. K, do you think this is a reasonable pocket pivot here?
Yeah, I just don't like the prior formation. Actually,
this noise here
is that one day where it just fell on air, fell on nothing.
Yeah.
If it did that once, it could do it again. So I really wouldn't. For me to ever invest in this stock again, I'd have to see a really nice long base formation and enough distance, enough time to be put in between what it did on April 27th. So in other words, maybe 6 months from now, I would revisit the stock if it was shaping up properly, or if there's some very interesting news out on the company that was really propelling it forward in a proper gap up and all that. But yeah, the way the markets are made in this stock concern me.
Yeah, and this is pretty bizarre because even if it was someone with fat thumb, if there's a market maker in this stock, they probably took advantage of it. I would say the fact that it closed very well is probably in its favor, but something strange went on here, and so for that reason, even though this would be a pocket pivot coming up the right side of this base, this is what scares us away from it. Now, if that doesn't scare you, then go ahead and try and buy it here, and maybe you would use the 50-day or the low of today as your selling point. FDIC is it's just bouncing off the 50-day moving average. You had a breakout here, thinner stock, so you break out and you pull back to the 50-day. So it's holding the breakout, holding the 50-day moving average, even though you didn't get enough volume today to be a pocket pivot. But it looks like if tomorrow you got heavier volume than this day right here, which I believe is 8 trading days ago, and the volume there was 860,629 shares. If it exceeded that and moved up, yeah, I guess it wouldn't be too extended from the 10-day, but so far that's just a normal pullback. It looks fine. Oh, we have somebody who came late to the webinar wants us to cover silver and Tiffany again. Does everybody think we should do that? Or should we make them look at that?
We can review it on the posting.
Yeah, you're just waiting to see if there's a pocket pivot. It's basically holding sideways. We don't think it's a shortable pattern, though. We don't think this is a head and shoulders. This is an accelerated break coming after basically a parabolic run. So we're just kind of watching this. But
actually, I did want to say one thing about silver, the pattern, because
okay.
I'm concerned if it's a head and shoulders. If you look at the weekly, it gives you a much broader perspective that it's certainly not a head and shoulders.
No, it's not at all.
To me, as it's just setting up. I mean, it had a huge move, so it's entitled to a fairly steep correction, and now that's what it's doing. It's working out its big move over a time of weeks and maybe a little longer. But at some point, and we're using GLD as our beacon here. Once GLD clears certain price points, I think silver is going to get dragged up right with it. So when GLD, for instance, if you look at the pattern, and it's just on the verge of clearing that midpoint at 151.45, and then the high of it is 153.61. When it clears either of those points, you could go in maybe with a starter position in GLD and maybe a starter position in SLV as well.
Although you would have been much better off just listening to our pocket pivot calls here, and you'd already be in, or here as well. And that's right, where we are in.
If you had actually bought on those pocket pivot days, because we're sitting in a position in gold right now, you can use 151 point. If GLD exceeds, say, 153.61, that would be a new high, and you could use that as a pyramid point for your initial position.
Right. And Tiffany, it's just breaking out of another flag. So that's for you, Ron. Even though you're late, we're cutting you a break. And that is a pocket pivot volume signature on a breakout, but it's not really a pocket pivot buy point because you're extended from the 10-day moving average of the magenta line. GMCR Green Mountain, coming back, and I believe it's matching its high, closing high here. I believe 82.99. Today we closed at 82.90, so it's getting there. Volume wasn't really that impressive today. It was pretty light, but it's still hanging out. It's holding up. It's holding up above the 10-day, so it's still viable. It's in play. If you own it and you held on to it and you bought it, on these viable gap ups and pocket pivots and whatnot on the way up, and you still have it, then it looks like it's still holding in okay. As long as it doesn't start to break down on some heavy-duty volume, and probably you want to stick to using, I think, the 50-day at this point as your downside guide, your ultimate downside guide. Ross Stores is that's a pocket pivot volume signature, but this just, you had this kind of gap up, broke out here, and you pulled back. Now you're at the 50-day. It's just trying to find support. Am I going to buy that? Yeah, I don't know. It doesn't really thrill me. How about you, Dr. K?
Yeah, it's okay. I mean, it's not a bad stock. If someone wants to take a shot at it here, that's certainly not a bad trade. However, it wasn't quite exciting enough to put on the reports list.
No. In Riverbed, that there's not enough volume there, just back above the 200-day after getting hammered for a couple of weeks, 3 weeks, I think it was. So there's nothing really there. You didn't undercut this low, which I think would have been constructive to see. So not really that exciting to us right now. Select Comfort is extended from the 10-day, so no, it's not a pocket pivot. Would have been, this is kind of a pocket pivot. I don't know, we don't get thrilled with teenage stocks, $15, $16 stocks. That's not really where you're going to make your big money, in our view. I mean, if you don't have a lot of money and you have some psychological need to buy a lot of shares, which is really pointless, then I guess that's where you go for the cheaper stocks. But I don't really see any reason necessarily to go after Select Comfort. It's just a betting company, isn't it?
Yeah, this market environment we're in, it's really favoring bigger names. So when you have a market cap that's under $1 billion, it's not the kind of market environment where you'd want to be buying that kind of name. The odds are very much against you. Now, of course, down the line, I mean, who knows? In 2012, 2013, we could get into a very small cap oriented environment like we did in 1991.
Right.
But we're not there yet. We're still in the area where your average daily dollar volume should comfortably be at least 20 million. You know, maybe 15 million if it ticks all the boxes in other areas. But I'd say 20 million minimum. And the average daily dollar volume on this one looks to be about right under 20 million.
Yeah. So an average daily dollar volume, for those of you who don't know what that term is, it would basically just be price times the average daily volume, and that gives you the amount it trades every day in dollars. Hellspring, this one's acting okay. That's a breakout from a flag formation. We had a couple little pocket pivots. These healthcare stocks, there's a number of them that have been acting okay, and the medical group, top 3 groups in the market right now are medical related, and number 9 is also medical related. So 4 out of the top 10 and the top 3 are medical groups. That's why we think you got to look at some of these, and we did point out 2 biotech names on pocket pivots several days ago, Biogen and Cepheid, and another one that I like here is Illumina to keep an eye on as a potential breakout. So that that area has been strong, and that's maybe going to be an area that you need to look at if this follow-through holds and the market continues higher. And so that's what we might emphasize, is that you want to look at the top groups, and among those, the health, the medical, and the healthcares and the biotechs are all looking pretty good in that regard. So that's kind of where we would be looking for the most part. Things like FTNT notwithstanding, because that looks good too, and it's medical stock. Ultra Salons, that's not a breakout, that's just continuing higher. It's extended from the 10-day moving average. The breakout would have been, probably I'd call this the breakout on this big volume, and I guess that would be a viable gap up, but the market was correcting at that time, so it's not clear if you'd be buying something like that. But it's a little bit thinner stock, and just continuing higher, but not a breakout. That's not a breakout. That's a pocket pivot volume signature, but not a pocket pivot buy point, because you're too extended from the 10-day moving average. Okay. Yesterday would have been if the volume had been high enough, but today it just didn't cut it. Jeremy, where you been? Fortinet, we talked about right at the beginning, and got a pocket pivot buy point today, and we sent out an alert on it. So Rockwood Holdings, that's trying to pocket pivot up through the 50-day. That doesn't look too bad. What do you think, Dr. K? ROC?
Yeah, I'm just looking at here. Good industry group. It's 11th out of some 200 groups, and overall, it's got that gap up earlier on that bodes well in its favor. Yeah, I mean it seems to. I respect the 50-day, but up until recently, because of the downtrend in the market, it's okay. I mean, it's not good enough to put on the reports list, but it almost qualifies.
Yeah, I think it's a chemical.
That's right.
Company as well. So
specialty chemicals.
Yeah, and all of these. If you look at Eastman Chemical, it looks a little bit similar. The one that we used to like was Lyondell, but these are in lower positions. So among the group, ROC looks better, and it's got the pocket pivot. But watch out for some of these Lone Ranger type situations where there's only one stock in the group that's acting well. You'd rather see several of them. So even though this may be viable, it's not clear to us that this doesn't necessarily have some huge upside from here. But it could possibly be viable using a reasonable stop at today's low or the 50-day moving average. Again, for those of you who got here late, Fortinet is a pocket pivot. We sent out a pocket pivot alert earlier today. So Priceline, just another bounce off the, well, didn't even really get to the 200-day moving average, but that's just a reflex rally from here. So you're not going to buy that. And there's no way to buy that. It's not really a pocket pivot. It's not really getting supported any moving average. The 10 days below the 50-day, so you got all this overhead here. So this is not something that we're going to be looking at.
Yeah, if it were closer to the 200-day, where you had a logical place to put your sell stop and your risk was fairly limited, then maybe it's a possibility, but it really doesn't check the boxes. So this is when it's best avoided.
Yeah, my thoughts also. One question. This is a good question, I think, actually. If you're talking about on the and Dr. Hiddis, I'm going to ask you this question. If the market direction model is on a buy signal and you point out the AGQ and the SLV and the GLD as ETFs to play the follow-through or the buy signal in the market direction model with, does that mean you just buy them here?
Yeah, you certainly could. You could go in with a starter position because GLD's just had a couple pocket pivots, and it's not extended from those pocket pivots. So you could do a starter position right here.
And how about AGQ?
Now that said, I should qualify this with if the model switches back to a neutral signal or a sell signal, that doesn't mean that you have to automatically sell your gold and your silver because these are focused ETFs. In other words, they're not general market ETFs, and they can act like a stock. So the model can be on a sell or a neutral signal, and these ETFs can just keep going higher. So I'll make a note of it when the model does switch signals again, whether it's prudent to unload your precious metal ETFs as well.
Right. Someone's asking if we bought any of these pocket pivots. Unless we talk about it in a report that we send out, and we also have a position in it, we'll disclose if we have a position in it. So that's the only time we'll let you know. We don't. Other than that, we don't reveal our trades on demand. You're going to have to pay us a lot more than $60 a month for us to tell you every single trade we're doing, or even to disclose what we're doing, unless we feel it's ethical to do so. And the only time we feel it's ethical to do so is when we put a report out on something and we happen to have a position at the same time. So. And I really don't think people would want to know what we trade in real time and what kind of trades we're doing. It might make your head spin on some days. So, and you won't understand it anyways, because I think one thing that's very hard for most investors to understand is the liquidity that the stock market offers relative to most other investment classes. Stocks are not like real estate. Stocks are not like art. There's a commercial where the guy is bidding for some artwork and he wins the artwork and in the bid, and they give him the artwork, and then he turns around and he says, "I'd like to sell that now." And the voiceover on the commercial says, selling stocks, buying and selling stocks right away makes as much sense as buying and selling artwork. No, that's actually a very dumb statement, because artwork, the only reason you can't buy and sell artwork and why it makes no sense is because it's an illiquid market. You need to go to an auction and find a buyer there, whereas in the stock market you can just click some buttons and you're in and out. And so a lot of times we're taking positions and we work positions. If we buy an initial position, it starts to work and we add, and then that portion doesn't start to work, we might back away and lighten up on the position based on what it's doing. And most people don't want to operate that way. They suffer from this idea that once you buy a stock, somehow you have to be married to it. And I would say when we make trades, we're trying to optimize. So we're constantly weeding out what isn't working as well as other things in our portfolio. And so we may be selling something that looks perfectly fine, but it's not moving as fast or not showing as much strength as something else, and so we may be moving into that, using the ultimate liquidity of the stock market to move in and out of things very quickly and try and optimize where we're going. So, you know, the long story, to make a long story short, you don't want to know what we're doing. Just you need to use the information that we present in a manner that's consistent with your own psychology and your own risk tolerance, and then just take the ideas for what they're worth in that sense. If you were starting to go long now, how close should you have your stops? Well, maximum stops, we think on the downside, should be 6 to 7%. Dr. K, let's say, as an example, let's say you went and bought, today you bought Fortinet as a pocket pivot. How would you handle that in terms of a stop?
Well, if you bought it at the end of the day and the stock was up 8.5% today, you should maybe, if your maximum risk level is 7%, I mean, you shouldn't be selling this just because it hits your 7% level. In other words, based on the chart pattern, I would want to hold this if it broke below the low of, you know how it undercuts the 50-day, so it looks like the low is about 22.25. If it undercut 22.25, I would be out of the stock. But that represents about that's about 10% from where the stock closed.
Right.
So you have to be willing to take a potential 10 or 11% hit, and if that's too much for you, you could either just go in with a smaller position, a half percent position, or just don't trade it at all, or maybe wait until tomorrow. Maybe it'll have a low volume pullback, and that will allow you to get in at a lower cost.
Right. So you're looking for moving averages, undercuts of moving averages. In this case, this area down here where it undercut the 50-day moving average, and you're using a low of this day 4 days ago as your stop. See, now the way I might handle this, being a little more high octane, I might only give it to, say, the 20-day. And that would depend on, say, if I bought some, if it's pulling back lightly and then the volume picks up and it starts to break down, I might cut out of it a lot sooner. Because my feeling is usually if you get a follow-through day, the stocks that are coming out and showing some power will generally continue right along, and you should be up 3, 4, 5% pretty quickly in general. And you know, this is a QE market, so things are a little bit choppy, and maybe it is a little bit different. But I would think that for my style, I want to come in pretty big, and if it's not working right away for me, and you have on the basis of a follow-through in the market and things in the market, the indexes are moving, but this saying it's kind of stalling out, it should continue for you. And I think on the follow-through day, if you're buying something like this should continue higher. And well, I think in a QE market, you might get a low volume pullback that you could buy into. It might argue that this thing's just going to take longer to move sideways. And you know, when it showed big strength in the past, like here and over here, it really hasn't led to any real big upside following that. So, you know, this could end up just being another one of these strong moves today, and then it just kind of drifts sideways. So you really don't know. But ultimately, you got to figure out what you're going to be using for your stop. Dr. K outlined how he would operate here. That's about 10, 11% though, and that's beyond what I might use as a 6 or 7% stop maximum on the downside.
Right.
Sometimes
I wanted to add that, of course, it's context dependent. So if we have scenario A where the market's going higher from here, and Fortinet is not pacing with the market, then I would probably be seeing other buy opportunities in stocks if we're into a new uptrend here. And
right.
I would lose at least half the position and then the rest of it because it's not keeping up. On the other hand, if the market's showing stalling action or weakness, then and that causes Fortinet to come back down to its 50-day, as long as the model hasn't switched over to a sell signal and maybe some other deleterious effects going on in the market, I would attempt to hold on to Fortinet, being given that it has a tendency to, when it gets going, it tends to have a nice trend. And as of late, it hasn't really, every time it has a big volume day, it doesn't go anywhere. So we'll see how this plays out. Yeah,
so we're getting on to 2 o'clock, and we're going to have to take off here in a second. But before we shut down, I just want to review real quickly what we're looking at in terms of the market right now, you have the follow through. I'm not sure what happened here. Whoops, I know what the problem is. We have a follow through today, so that's all you know for sure. So the second part of the equation becomes, what do you buy? Well, we see a couple of pocket pivots here and there. Yeah, you could take some positions here. I don't really think you need to go in heavy here. For my money, if the market's going higher, then I think you're going to be taking gold and probably silver higher, and you also have a little bit of insurance there in case there is some sort of financial crisis coming out of Europe, or the dollar starts to tank again because they raise the budget ceiling and we're going to start, or the deficit ceiling, we're going to start borrowing a lot more money. I think gold kind of gives you a plan, all those, and if the market does continue higher, I think gold will continue higher. Silver will probably continue higher. So I think for my money, these are better areas to play. Other than that, you might just be looking at an index rally. So I also like using the ETFs and staying with a sell signal. If the market direction model reverses back to a neutral or a sell signal, then you just bail out of these things. I think, Dr. K, you're operating with a pretty close downside stop from here, right?
Yeah, generally everyone should position size according to their risk tolerance, because 3 times ETFs are very volatile, and the percentage move on these things is generally more than 7%. So knowing that, you might want to go in with a half position.
Right, and what would blow you out of your buy signal?
Well, you mean in terms of the model? Essentially, we're looking at either a weak rally that is taking place among leading stocks and major indices, or of course, on the flip side, the market just fails here, and then a sell signal would inevitably be issued if new strong selling were to emerge.
Right. So that's basically where we're at. There's a couple of things you might move into, but we'll just see how things develop over the next few days. The other thing is you may set up the short side again, and stocks may just rally, short sale target stocks may just rally back up into a logical area of resistance. The market rolls over again, and the short side comes back into play. But right now, you got a follow-through day, so you're looking at how you're going to play it. And there's far and few between things that you can just jump in and start buying up here. There's areas where you can take some small positions, we think, but we can let it develop for now. So you just want to stay tuned and watch for any alerts coming through, pocket pivots, follow the stock. If the portfolio simulator dude decides he wants to do anything, but I think he's on summer vacation right now from his day job, and probably out in Acapulco right now. That's where he is. So he's not going to be placing any orders with his broker just yet. And we'll see how this goes. But for now, we like the gold here. That's what we have. And you can try and play the index move with the ETFs. But as far as stocks go, far and few between. But maybe there's a couple of things. We'll just see how it develops. So stay tuned. And that's all we've got for now. So everybody, until next time, we'll talk to you all later.
Take care.